All right. So welcome everyone. Happy new month to everybody. It's a beautiful month, right? Already. We just got to live through it. So this will be the first outlook for the month, February 2026. And the template is always the same thing. It's always the same template week in, week out. So people always say trading is very boring. Yeah, it actually is boring. It's not meant to be exciting, right? The same thing every week. You check the Forex factory, you check the economic calendar, you look at the events, you decide what days you want to trade. You just wait all you can. So you wait for as long as you can. There'll be weeks you don't take trades. There'll be weeks you take 2 to 3 trades. There'll be weeks you take 4 trades. So you just have to have your idea, wait, execute, week in, week out. So the same thing happens. From the weekly calendar, the economic calendar, we could see already that we have a lot of news events. So, firstly, I would like to toggle the event that really concerns us or which I trade. So, we have the dollar, GBP, euro, CAD. Those are then let's put on JPY. So, on Monday, we have a news event. On Tuesday, we have a news event, both dollar events. On Wednesday, we have a news event, and so on and so forth, basically. So, it's a very heavy week. And don't get confused on which news event is more important. All events are red folder events, but you always want to have 3 events in mind. They call them the big 3 events of the dollar, which is the CPI, that's the inflation, FOMC, which happened like previous week. That's for interest rates of the currency and of the dollar. And then we have the non-farm payroll, that's NFP, which has to do with jobs in America. So those are the big 3 events. Those are the most important events. So if you are going to form your week around news events, in as much as we have red folder news events on the dollar on Monday to Friday, your focus doesn't need to be on these orders. Your focus should be on NFP, which we have on Friday. Please, everyone should just mute their mic, please. This is just a reminder. So before we even go to the chart, on NFP weeks, which is a protocol for me, and I would say most ICT traders, we want to have our focus on 2 times during the week. Monday, Tuesday, the beginning of the week, as far as you can from the event. You want to stay as far as you can from the event. So Monday is a trading day, Tuesday is a trading day on NFP weeks. Then the closer it gets towards news events like NFP, CPI, and FOMC, you really want to dial back and be patient, be as patient as you can, due to the fact that if you have the understanding that manipulation comes around high events like these, like events that are really, really important. So what always happens before the manipulation is accumulation. So what happens in accumulation? Literally nothing. It's just consolidation, the market going back and forth. So you try as much as possible to get good moves Monday, Tuesday, then just see through and just be patient through the consolidation that will happen Wednesday, Thursday, just the back and forth choppiness, and then post NFP, you could try and see something if you have the opportunity to. So that's something that always happens when you see 2 events on the same day. To navigate that is to wait for the first event to happen. Most times it's going to be a manipulation. Then once the event has happened, you will just try and find a continuation for the second event to play. So that's the economic calendar and my protocol regarding NFP weeks. So now we'll look at the charts and we'll make this as fast as we can. So protocol for checking the monthly charts, you don't really need to check it on the second week of the month or the third week of the month. You do this at the beginning of the month and at the end of the month to have an idea on where we are at. So due to the fact that January just ended, we will need to look at what the monthly candle printed and try and find an idea for what we could potentially have for the next month. Now, looking at the monthly charts, I know that everybody is already aware from the previous outlooks we've all been doing that we've been bearish on the dollar. And my sentiment and my stance hasn't really changed. I'll go into that in a couple of minutes. But I want you to notice something. So last week, I was looking at the monthly closure on the dollar, and my thought process was, if we have this high on the monthly being swept, and this is a range, right? This is consolidation. And what happens when you sweep a high, you now expect a distribution. My my expectation was I didn't want to see the monthly chart or the monthly candle close back into the range. So we have the range low here, these two lows, and we have the range high. So if I wanted to see much more bearish price action on the dollar, I would really have loved to see, if as you could see, it was a really long candle. So as at 3 days before the month closed, we had a very, very, very strong bearish candle below the range. So my third person was like, I want to really see this range held. I really want to see it like close below the range. And that would have been perfect for me to expect much more bearish signs. But now we've seen the monthly chart print a candle of such back into the range. And if you have the expectation as an ICT trader or a trader that trades in this format, and you understand what the power of three says, and when you have the market accumulating and just going up and down, when you finally get a manipulation to trick people into thinking the market wants to buy, and then we have something like this, it makes a lot of sense to just continue, right? But in a situation whereby the market closes back into this range, there's a very high chance that this was just swept out, and this will be a continuation to keep buying. So now this signals low probability to me, and it signals like uncertainty, because if you go down to the weekly time frame, you see much more clearly that, okay, you could make a case for us selling, right? So you could just come out and say, okay, we expect the market to trade into this weekly fair value gap and sell. Yes, that makes a lot of sense. This is a weekly fair value gap, so I'll highlight that. You expect the weekly to do this. It makes a lot of sense. But at the same time, you have this at the back of your mind that we had these lows that got swept. And if you think about it, we started the year doing this, trading down and sweeping lows. There's a very high chance that, okay, we could see a reversal totally. Will that happen? No. We don't know yet. So we just need to really watch for this price action. So my outlook or my expectation will come in two phases. It's kind of obvious that the next drawn liquidity is this weekly fair value gap. Why did I say it's kind of obvious? Is a template we have from not weekly, external to internal. So internal liquidity to external liquidity, then external liquidity to internal liquidity. So we have price action or levels like a fair value gap as internal liquidity. So this is a swing high and this is a swing low. The market created this fair value gap. It traded into it, which makes it internal liquidity. That is just being delivered to the market to accumulate more positions to then short to the external low, which is the external liquidity. So the expectation is always this: the market sold, took this low, created the fair value gap. So that was what external, traded into the fair value gap, internal. After the fair value gap, what's next? A swing low to get attacked. External. So we swept this low, external, this another external liquidity. We created a swing low, created a fair value gap as internal liquidity, traded back into that fair value gap. From there, we saw markets sell to this external liquidity. So it's the same idea here. We have a weekly fair value gap. We just swept this low. Is a no-brainer that the next idea we have is to trade into the fair value gap. Now, Are we going to buy from here? We don't know that. Are we going to sell from here? It's something we don't know. We're not trying to really predict, right? But we always want to stand on what we understand or what we know for sure. So that the drawn liquidity now is to trade into this fair value gap. And that is where my outlook is going to, will I say, stop for the day, in the sense that okay, we have an idea, we're going to trade into the weekly fair value gap. Now, due to the fact that we have a candle that looks this way, so I really don't have the candlestick names. So you could they'll say shooting star, hammer, doji, whatever it is. I really don't care about the names because I already know how to read them. What this is telling me, signals to me, is at a point we were much more bearish, which we have a candle that was very, very bearish. It's a red candle in my color schemes. And then there wasn't selling power anymore, which now gave us this week. And now this is a bullish candle. That signals to me that we are currently bullish for the time being. I don't need to know if it's a hammer candle or a doji candle. I just need to know what each candle is doing at a point of interest. So at this point, I know that okay, the candle closure we had from the previous week is bullish, and it swept these lows and gave us this week. So I know that okay, I'm expecting a little bit more movement to the upside. Now, if we had a stronger bearish candle, I wouldn't really expect a deep retracement. I would just expect maybe the market to trade into this fair value gap from this level and potentially sell. But due to the nature of the candle we have, actually expect the market to do something like this, trade deep into the fair value gap, due to the fact that the candle is, it has a lot of wicks basically, or just the wick is very long, and most of the price action is in a short body. So I actually expect this deep retracement to this weekly order block. Then what happens from there would be communicated on the group chats on the channel. So now that we have our idea from the weekly, we'll drop down to the daily, the same protocol we always have. So highlighting our levels, I'll pull out this low that got swept, which now paints the picture as okay, we had this consolidation here, then the market took stops out, then we could do what, either buy or either sell in the long run, right? So the two ideas on why I always try to explain this now, what I'm about to explain. People say, okay, why do you think the market will do this now? Stop people out here and now buy. You can't really just make a claim and say he's going to do this and he's going to buy and he's going to do this for every load that gets swept, right? You have to understand the structure and the nature. So I'll paint this picture for you. We have a consolidation here. Anybody that was long here, so I'll pull out a long two. Let's say somebody was long here. I want you to ignore it being a daily time frame, because time is the price is fractal. So the same thing you see on the daily time frame happens on the 5 minute time frame. It happens on the hourly time frames. So just think of it as normal price action. Let's even say on the 5 minute time frame. Anybody that was long here probably did what, put a stop loss here, right? So anyone that was long here, whatever, in this whole range, you were long on this position, then you had your stop loss somewhere high, right? We got filled here, the market was trading, and then what happened? What happens? The market stopped you out here. That was liquidity being taken because you had your stop orders here, your stop loss was here. Now, what is the second form of liquidity that was resting below these lows? So any trader that saw this as a consolidation and was expecting a breakout would do something like this: set a short position on this low and put a stop loss here, or this, or these highs here, or something. So they had the idea to short here. Again, ignore it being a daily time frame. And no, I don't want you to think about, okay, it's too long, is a swing time frame. Forget about the time frame. Just look at the candles. So anyone that was longer got stopped out, they had their stop losses here, and you had short orders resting here. So that's liquidity here. Now, it makes a lot of sense. These people got stopped out here. This one's got triggered. And what happens? They're going to get stopped out here too. So that's why it makes a lot of sense for the market to draw back to this high and this high potentially. So when I say things like okay, manipulation and distribution, this is what I mean. Manipulation being the fact that anyone that was long here that got stopped out wouldn't want to take a long position here because they're scared if be manipulated. And anyone who set a sell order here looking for a breakout will get stopped out here. Manipulation for them too. So that's the idea and the foundation people always have. And yeah, back to the outlook. So we could see that it's clear right from the script of this low that this is the next on liquidity. So remember this red shaded area is, let me go back so you could pay attention. The red shaded area is the weekly fair value gap. You can see, right? So now going back to the daily, that's where we're coming from. So this red shaded area is the daily fair value gap, is the weekly fair value gap rather. Now what happens? You can see that in that range, we also have the daily fair value gap here. Okay, so potential to draw into. So I want to go back to the weekly so I could highlight the other block, which I said the market can draw into due to the fact that I'm expecting deep retracement because we have this candle, the nature of the candle is signals. Even if we're going to sell off from this fair value gap, it's going to go much more deeper. So my patience, or I would say, is waiting for the market to get to these levels. And now back to the economic calendar. We have, like what I said, you want to have your attention on Monday and Tuesday, and then try and skip Wednesday, Thursday, since that's close to NFP. Then after NFP, you can have your idea or your plays or trades. Now, read out signals to me that okay, we could have Monday, Tuesday do this. It's a perfect picture I'm trying to paint, and this is how your outlooks always want to be. You always want to have this perfect picture that this is what I'm trying to do. If the market does this, I will do this. I'm not trying to over predict. So remember, I said Monday, Tuesday is where you want to have your focus on initially. So it will make a lot of sense if we have something like this. Remember, our drawn liquidity is the weekly fair value gap. So we have the weekly fair value gap and this daily fair value gap. So we have maybe Monday, Tuesday do this. We have another block. I'll point that out now. So I just want you to look at this price action now. But let me draw this arrow. So Monday, Tuesday should do this. Then we could have a little bit of consolidation and we'll have a strong point around this area. We should be around this area around NFP or something. Then from there, we will now wait for what the market is going to do. If I'm just going to consolidate in this area, and maybe NFP will do what? Either buy, right? Then we cannot catch a continuation, or sell, and will not catch a continuation. So it makes a lot of sense to find your longs on the dollar to this internal liquidity. Once you've had that long position and you take your take profit, wait for the accumulation on Wednesday, Thursday, whatever it is before NFP. Either wait for NFP to do this breakout, then we can have a continuation. Or for NFP to do this from here, from this consolidation, violate the daily fair value gap, then I cannot have a continuation here. So back to what I was saying about any 1 point in the order block. The order block on the daily is this level here. In case anyone didn't see it, or if you saw it, this is me confirming your idea. So why is this another block? The last down close candle before the market took the stop orders. So we had liquidity resting below here. After this candle this is a bullish candle. Then what happened here? This bearish candle just sold off. The fact that I sold off, that was the last candle that was in the range, basically. So that was the last candle in the range. I had all these orders taken, and now we've closed above that candle. So now that's an order block. It might not look like an order block till I drop down to lower time frames, and you're like, oh, it now looks like an order block. So yeah, we should trade into this order block, into this area. Then we should have Monday and Tuesday buy up to here. From here, you want to wait. And yeah, so let me drop down to the lower time frames. So now you can see it's much more clearer and it makes a lot of sense. We have bearish fair value gaps on the 4-hour time frame. Then we have the market close above those fair value gaps, violating the bearish PDRs. We want to see the market trade back down into here, then buy. Now, when we get to this level, so I'll go back to the weekly. When we get to this level, how do you know what the market is going to do if we're going to buy, if we're going to sell? this now takes me to what I always talk about, which is, oh my God, I've just blanked out basically. Time frame alignment, yes. So I always say it's the weekly time frame to the 4 hour time frame, so 15 minutes. Then we have daily 1 hour, 5 minutes. So if you want to make it much more lengthy, we have monthly, daily, 1 hour, 5 minutes, basically. So just have this at the back of your mind. Now, due to the fact that we have a weekly fair value gap, we also have a daily fair value gap, but we have a weekly fair value gap. That's where we spotted the fair value gap first. That is our draw liquidity. So whenever I'm looking at the daily time frame, let me show you an example. So here, if I'm looking at a daily time frame and I spot a fair value gap, I spot a volume imbalance, and I trade into there, I'm not going to look for the shift in structure on a 15-minute time frame. So if the market I traded here, let's say into this volume imbalance now, I'll not just do something like, okay, I'll just rush into 30 minutes now, or go to one of the mini time frames, right? And yeah, from this level, I'm not going to go to 30 minutes time frame and just short any shift in structure. It has to come from the hourly, and that's the 1 hour, because it follows the alignment structure. So you go to the 1 hour and find your shift in structure, basically. That's where everything comes from. Time frame alignment. So yeah, this is the price action we have. After the 1 hour has shown us sign, we probably have a short position on this fair value gap. This is a mitigation block here. So around this level, when the market closes below, you have an entry here. So I've shorted from. Then if you probably have checked after we had the shift structure here, maybe if you had looked at, I don't want to go down into Q zones and looking for 5 minute shift in structures, but that's the that's the idea. So due to the fact that we had the weekly fair value gap here, what are we now going to do? Whenever the market trades into here, which is our first idea for the week, we will now wait for what the 4 hour time frame is going to do, not the 1 hour, not the 15 minutes, not any other time frame. It has to be the 4 hour time frame. So from this level, I'm going to draw my structure again. We'll trade down here Monday, Tuesday. We'll have our buys, right? Something like this. Then we'll have a consolidation of the 4 hour time frame. And now I want you to pay attention to time frame or time frames. When you have a consolidation on the 4 hour time frame, that's actually a lot of candles and a lot of time, because one 4 hour candle is literally a whole session, is the whole of London session. So imagine having 10 4 hour candles, that's 40 hours. And 40 hours is basically almost 2 days. So that's 2 days of consolidation. You are not doing anything. So if you are going to have, if I'm saying, okay, we should have a price action of this nature at some point in the week, it means that there's going to be a lot of waiting after we get this first move. So this is how my week is going to look. I'm expecting that we should do this, sell into here and buy. If we just open, if the market opens now and buy straight, there's nothing wrong. I'll just wait and see what NF is going to do. But like if we trade now into this fair value gap, I'm going to long here. I'm going to look for a shift instruction on the 15 minutes, because remember what I said, weekly 4 hour, 15 minutes. So when we trade into a 4 hour internal liquidity, time is all fractal, price is all fractal, we will now drop down to the 15 minutes in Q zone, in New York Q zone, in London Q zone, to find a shift in structure on the 15 minutes. Due to the fact that our reference point has now become the 4 hour. And yeah, I'll look for the 15-minute shift in structure here to long. What happens here again? If you still have, if you just trade into this fair value gap and we retrace, I'll still look for more longs, because like I said, I'm anticipating a much more deeper retracement. So once that is done, let's say to this fair value gap on the 4 hour here, to around these levels, once I've had my take profit to around here, that's done. So that literally means whether I caught the move or I didn't catch the move, I'm not going to do anything once the market has gotten there. So if the market opens now and just gaps up, or Monday Asia session just buys and hits the target, I'll just have to wait and watch what the market is going to do post NFP. So yeah, first idea is the longs that will happen here, and then after this consolidation, I'm just going to wait for NFP to either give us the idea to drop or give us the idea to long, basically. So yeah, that's my outlook, and I hope that was clear enough. Before I go to the euro, I just need reaction if that was clear enough. And yeah, I just need to okay, that's clear enough. All right. So before I go into the euro, I just need to tell you guys that if you have any questions or concepts that need to be clarified, you can just drop that in the chat box and I'll check that once the outlook is done. So back to the outlook. Euro USD. Now, dollar, I'm expecting initial buys. What happens on the euro? I'm expecting initial sales. Remember what we always do. You want to look at what Euro GBP is doing. Hold on. You want to look at what Euro GBP is doing and decide which pair is going to be the better asset class. Euro GBP signifies or is showing us that it's a little bit more bearish because we had a sweep of these lows or highs rather, delineating that sweep of this high. Then we could see what happens again, external towards internal. So we'll probably have this levels here because there's a fair value gap here. There's a fair value gap here. So that's the draw on the higher time frames. So yeah, looking at it on the daily, UGB could draw here to this low. But due to the fact that now we're in a consolidation in this area, that's why GBP might still look good or might be bearish too to trade. But like on the higher time frame perspective, on the longer standpoint, it's much more safer taking you as a short because you can see like okay, UGBP is actually trading lower on the daily time frame. So we could see the market trade down lower. And yeah, that will really give us spontaneous moves if we're looking for short positions on the euro. So the outlook is going to be much more faster here since we have an idea on what the dollar already printed for us. Similar here, like the high got swept into what a monthly fair value gap. If you pointed that out, that's very good. So we swept this high into this monthly fair value gap here. This is these highs here are also levels of liquidity that was swept. So same thing. I want to pay attention. I want you to pay attention to this monthly order block too. So it makes a lot of sense, right? To start what February, mean what selling. And again, like what I said, once we have the market trade to this level, are we going to buy or good sell? We will allow NFP to give us more feedback. So if you draw down to the weekly time frame, you see this level is our monthly order block. So let me change that to a bullish one since it was bullish. So now, you remember when I told you I want to see deep retracement on the dollar due to the fact that we had, will I say, what we call the candle? They might say it's a hanging man or hammer, whatever it is. We have this long wick and we have this small body. It signifies that, okay, we're bullish at a point and then the market flipped on the side and we're now bearish. Now, you can see that the deep retracement I'm expecting aligns with the monthly order block I highlighted earlier on EU, right? So you see everything is coming together. If you look at it on the weekly time frame, again, from this level, my first outlook is from what weekly external liquidity swept to this fair value gap. So from here, what are we going to do? I don't know. So from here, we'll just chill for what the 4 hour is going to do. Shift in structure, drop down to the daily time frame. The same thing, right? Now, I want you to look at something. This will paint your levels of invalidation. From this price action all the way up, in this whole section or in this whole move, I want you to look at the levels that were balanced and the levels that have not been balanced. And what do I mean? If you have an order block, as the market traded into that order block to use that to propel price further. If you have a fair value gap, has that fair value gap been filled? So that's what balancing means. So in this whole run, all the way to sweeping this high as a final point of liquidity, we have one, this fair value gap here on the daily. One, the bullish fair value gap. We have this area from the wick to the body or the whole candle, however I want to align it, as the breaker block, right? So we have the market creating this high, then lower low, sweeping this high, then a shift in structure, then drop down into this fair value gap and this breaker block. So that area is why the market has balanced this level. So now the market had a buy on his way down, created this red candle, sold. Let me zoom. Sold into the fair value gap and this mitigation block, whatever mitigation or breaker block, and we had a buy, now making this what? A proportion block. Now a proportion block is basically an order block that was traded into another block. So let me see if I can get another example here for a proportion block. Yeah, so we have this order block here. When the market closed above it, we traded down here and then down and down into this order block again. So it's kind of like more order blocks moving. Same thing that happened here. Market bought, we have this red candle sold into this fair value gap. So this level of candles, when we closed above, that became the proportion block. And from there, we just saw the market spike up to this high. Now, this level is balanced. This level is balanced because the market had traded from between the wick and the open of the candle to the proportion block. Now this is balanced. So now your level of invalidation should be that we have this daily fair value gap, right? And let me go back to the weekly to highlight the weekly fair value gap. We also have, this is the weekly fair value gap. So if on the daily time frame, like what I told you, I'm expecting the market to, trade into this other block again. Why is this another block? We had the drawn liquidity here at the point where the market was here. People that were trying to, people that were trying to catch tops would have been like, okay, this is, or whatever, support and resistance, this is resistance. They might try to short it since we're closer to this side. And what happened? The market just, obliterated everything and took these stops. So this last candle in the up move, where we had this reversal, now we are close below the open of that candle. That's the other block. So expecting the market to open, trade into this other block, sell into this daily fair value gap very well, right? So I'm expecting a deep retracement. Now, my level of invalidation looks like this on the daily. If I start to see that the market is trading below this fair value gap here, now take this low because this low was balanced on this proportion block. Remember, that's when I'll start to like, okay, have much more confidence that okay, when I started to see lower prices, then closing above this on a daily time frame will now signify okay, the market to use this level to follow up prices on. Yeah, so that's how it look like. But like I said, we want to wait for what NFP will show us. And our first outlook is just going to be the initial push. So yeah, it kind of aligns how we have this black area or this black line delineated as the daily order block. We also have this 4-hour fair value gap that the market can trade into around this area. So yeah, we expect the market to come up here at some point in the week, give us the hand. So I'll be shorting, right? I'm looking for shorts, then deep retrace. Then from here, we want to just see consolidation. We don't know what's going to happen, right? NFP might either again buy or sell. We just want to wait for much more confirmation. I really love the market trades down here. So this will be like my John liquidity, right? Because on the 4-hour time frame, this is not the balance. This area is not balanced. This area is not balanced. But I really love, again, on the 4-hour external range liquidity, external range liquidity to now trade back into the fair value gap to now look for the next external, and come back to this level. So it's kind of a loop because an internal range liquidity on the lower time frame, my external range liquidity on the higher time frame, and also it all just comes together at some point. But yeah, this is the first outlook again, what happens if the market should just open and sell? I miss the move. Once we are at this area, I'm just going to be patient. Even if I caught the move or I didn't get the move. So the outlook says that I'm just going to try and find my way in a trade to this level. However, we are going to get to this level, I'm just going to be patient to see either upside or downside. So that's the outlook for the week. We'll go further to lower time frame. I'm not really dropping to the hourly because I feel the fair value gap we're referencing is from the weekly time frame. So you always also want to have your 4 hour candles like at the back of your mind this week. So, but what can we also see on the hourly just for extra confluence? You could see that this gray area was the 4 hour fair value gap rather. So we have this H1 high. We also have this whole level here of these fair value gaps that were inverted on this move. So if I draw them out, they look this way. So yeah, this is an area that I can expect to see price drop back to before we can resume selling to then take this low and depreciate to this level. Then from there we'll see what NFP presents for us. So yeah, I'll be active Monday New York session due to the fact that we have a news event in New York. So I'll just expect London to kind of be choppy then around New York. So Monday New York, Tuesday London, New York. Then I'll be patient to see what the market will do right before NFP. Then after NFP, I could now then get another move. So yeah, we could look at cable. So GBP USD and just have an idea, the same thing as Euro, right? Sweep of highs on the monthly time frame. One, because swept here, the market traded down. Remember, internal liquidity towards, let me highlight that. Internal liquidity towards external liquidity. So that's why there might be times where your buyers will just be like, okay, I'm looking for longs for months, basically. Because my idea is from this monthly fair value gap, I'm expecting the market to draw to this high. So this is buyers from what? November, December, January. You had buyers for a whole month or for a whole 3 months, basically, to draw to this high. So that's a lot of time to look for long positions. So what happens? We are expecting that after the market has taken this high, we should now probably do what? Trade into some form of internal liquidity, maybe this BPR or this other block here, you know. So it's the same idea, similar to the euro. You highlight this candle and expect, okay, the weekly time frame is very, very similar. Remember, we had this blue area is coming from the monthly time frame. So this is the monthly order block, close above. I'm expecting market to drop back there. On weekly, it now aligns with a weekly proportion block. Why? This was all this series of down candles. We stopped out these lows was the order block. We closed above it. The market did what? Traded back into the order block here, and that now made what? Any close above now makes this a proportion block. You can still call it an order block, right? To be honest, I don't really care about terminologies. I'm saying, okay, this is a mitigation block, this is a breaker block. Like, the way I don't care about hanging man or doji candles. You just need to know what is happening. You could just still say, okay, this is another block. I expect the market trading to another block. It doesn't really matter. It's the same thing. We just need to know that the market is trading somewhere. You could call it whatever I want to call it. Everyone has the terminologies. So you could call it candles, the colors, red candles. I'm expecting the market to trade back down here. Like I said, deep retracement to the daily time frame. So we have this daily fair value gap from here. In contrast to what we have in euro of this other block here, I'm expecting that the market does what? A little bit of retracement before we now see downside. On GU, we don't have another block. We don't have another block. But what do we have? Before I point it out, just use like 10 seconds to find it. Then I will now point it out and you're like, okay, yes, I got it. So we have this weekly fair value gap that was supposed to be a bullish fair value gap. So if we were bullish, we wanted to see the fair value gap remain intact. Then maybe, daily fair value gap from there, you now see the 1 hour long, right? You see bias, but due to the fact that we violated that, the idea will now become a little bit of retracement into this fair value gap, inverted fair value gap now. Then we could not see the downside. Then again, same thing. Once we have gotten to this level, we have the daily fair value gap. We have, this blue area basically is the monthly and the weekly order blocks, proportion block that we got. So once we are around this area from, let's say, from this high, right, to this region, you just want to wait for what NFP will do because it could really get choppy. Monday could literally just do what? Sell, give us the whole move, like how we had this Friday candle, unexpected, right? It's a large range candle. We could have maybe Monday do what? Do this, trade down, and maybe Tuesdays we will now start the consolidation, and we'll just be here for like 3 days. That can happen, and we could buy, continue, or we could from the consolidation, sell, and now use these levels to seek lower points of interest. So yeah, the outlook is pretty clear. Expecting a move in the beginning of the week, consolidation middle of the week, then NFP to either give us a continuation idea or a reversal idea. So that's the outlook for the week. If there's any other, let me just do one more on, I don't know, USD JPY, because I know a lot of people still trade that too. So USD JPY on the monthly time frame, we took this high on the monthly time frame. Let me just use that as, yeah, we took this on the monthly time frame, and we have this monthly fair value gap. So yeah, remember monthly, daily, H1, M5. So I don't even really need to know what the weekly is doing, but you could still check what the weekly is doing just for more, will I say, clarity. So weekly fair value gap, potential joint liquidity, as a bearish weekly fair value gap. Then we have this monthly fair value gap. Then from the daily, the same thing, similar to the dollar, right? Now we could even see USD but it looks much more bullish. So this is where correlation comes in. Now USD kind of signifies, it makes a lot of sense because we're coming from, we're bullish, we're much more bullish. In contrast to, if I go back to what the dollar was doing, you could see how this whole price action of the XY was just consolidation, and we swept this low. We could not see reversal. So on USD is much more in a sense that we're bullish all through, right? So we've basically been bullish from April last year, and we've been going up, and we just have the market trade down into the monthly fair value gap. So it makes a lot of sense that okay, from here we're aiming for these highs. And what does that mean? If that happens for JPY, it makes a lot of sense for DXY to buy, like what we anticipated. So, but we don't really want to over predict. It's a similar idea. I want to see the market have a little bit of retracement here, trade into this daily fair value gap. From here, remember, it's a daily fair value gap because we have this high, this low. Let me highlight that so no one gets lost. We have a daily fair value gap here. This is the weekly fair value gap. This is the daily fair value gap. So this is the fact that that's the weekly fair value gap. 4 hours is the next time frame we want to see our shift in structure from. We can also see that we have a level on the 4 hour here. So you can always just paint out these levels and look at okay where a lot of time frames are agreeing on. It makes a lot of sense that okay, from this level, which is our 4 hour order block. Again, why is this an order block? We had liquidity resting here. We had this monthly fair value gap, right? This blue area, and the market traded close to it. We traced up, and what most people would think, okay, this has already been a bottom, so now like long, but the market traded down into the point of interest, which was the monthly fair value gap. Now we've closed above, so this is another block. All this set of down candles, red, because it's kind of like a manipulation. So expect the market to trade into the order block or the whatever I want to call it breaker. Like I said, names don't matter. this level. From here, we expect buys into the fair value gap. You know, weekly fair value gap, daily fair value gap, H4 fair value gap, 4 hour. So from here, whatever the 4 hour is going to do, consolidate, wait for NFP to either what start to close above this area. So when is it valid enough for me to say, okay, it's kind of like we're looking bullish? This is our weekly fair value gap. This is our daily fair value gap. This is our 4 hour fair value gap. If I have the market trade above on a closing basis on the daily or 4 hour, the weekly and the 4 hour, let's say the market is around here, it makes a lot of sense to, you know, aim for the highs here and keep going up. But now, most people say, okay, you missed a lot of moves here, right? There's uncertainty in this area. We are only certain that, okay, again, this is just for hypothetical scenarios. I'm not just saying you should just set this a long order here because what happened, the market could, still trade lower. But what happens when we have here, we'll draw down to the 15 minute because this is the level of 4 hour I want to see movement from. So remember, weekly 4 hour, 15 minutes in Q zone, you find your trades. So around Monday, New York, Tuesday, London, wherever it is, drop to the 15 minute time frame, look for a shifting structure in Q zone, and we have our level of certainty. Okay, it makes a lot of sense for the market to buy around here, right? However, it is your stop loss is not going to be this wide because you're going to wait for confirmation 15 minutes. So it could look something like this when the 4 hour has created a low and it started to move up on 15 minutes. You can now take a long. So we have two levels of kind of clean price action. One, the market trading into here. Once the market is here, is uncertainty, and the market closing above the area of uncertainty to then do what? Look for what the file has given us some confidence, and we're not in Q zone. We can now like around these areas take another long position to attack the levels here. Now this is enough, right? You don't really need to catch this place because you might take a loss here. The market could equally just do this, after the consolidation and all, yeah, just sell. And now if the market does this, what happens? This play never happened. So it's still the same idea. This one play that happened, you got to the level of uncertainty, you would wait. And then once you are leaving the level of uncertainty, whether to the downside or to the upside, you are trying to catch just one more move to either see this high or these highs and this low here. So that's the outlook. Clean, clear, concise, simple. Not too much, whatever they call it, or whatever they would say. So yeah, for questions or concept clarifications, if you have one, you can just let me know in the chat box and I'll try to answer them now. So yeah, I would love to. I'll end the recording here now. So since that's where the outlook ends, and I see one question here. Okay, let me just answer that. Is that for top down analysis, weekly for everything? So top down analysis just means you are trying to find your bias, like what I did. I started from the monthly time frame and then I went to the weekly to just look for much more PDRAs, fair value gaps on the weekly, other blocks on the daily. You are doing all that before you get to the lower time frame. So you have your bias from the higher time frame, which is the monthly, the weekly, the daily, before you now drop down to the execution time frame, the hourly and the minute time frames. That is what top-down analysis is. Time frame alignment just tries to connect your PDRAs. So if you see a fair value gap on the daily time frame, you are not just going to go to the 5 minute time frame to look for sales or your market structure shift. That okay, let me go back to the chart so I can paint a picture or show an example. So I'll use this price action here on what we're anticipating for the week. So let me just assume there's no weekly fair value gap. So now if we're looking at this level, this is a daily fair value gap. Top down analysis is still in play because we're getting the bars from the higher time frame dropping down. But now that we have a daily fair value gap, what time frame are we supposed to look for our market structure shift? What time frame are we supposed to look for, our order blocks, our fair value gaps, on the position leading to the target, right? So if we're looking at this from a daily standpoint, I'm not just going to go to the 4 hour time frame and just say again, this is we're no longer connecting this to the weekly outlook on it being a weekly fair value gap. I'm just using that as an example of if this happens to be a daily fair value gap alone. I'm just going to drop down. I won't drop down to the 4 hour because the 4 hour is kind of close to the 1 hour to the daily time frame. So you can't really have a lot of feedback, or there are not a lot of candles being printed. So the best time frame to look for that, shift in structure would be on the 1 hour time frame. And you can even already see how what we start to see as a retracement on the daily now looks much more clearer, being balanced on the 1 hour time frame. So you can now start seeing the candles clearer. So that's the same way it's going to look when we get to levels of the daily. You now start seeing the 1 hour show more candles. And once you now have that form of market structure shift on the 1 hour time frame, you now start having what 1 hour fair value gaps that you could trade from. The market will trade down, create another 1 hour fair value gap. Now, where does the 5 minute time frame come in? Due to the fact that the daily time frame was where we had our bias external to the daily fair value gap, we now had the H1 shift, create a fair value gap, sell again, create a fair value gap. We will not just, you could do that, right? You could just take your short position straight, but it will be much more, efficient, having a higher risk reward if you now draw down to the execution time frame, which is the 5 minutes. So that's how the time frame alignment works. So you can now drop down to the 5 minutes in Q zone. And let's say this level, where we're having our sales. And you can now see more candles from that 1 hour fair value gap to the 5 minutes. We now print more candles that will now sell. So that's how the time frame alignment works. It's not the same as top-down analysis, because top-down analysis just means you are looking from the higher time frame to the lower time frame. So we are going from the top to the down, basically. But time frame alignment is connecting the PDRAs. So a weekly fair value gap has been spotted. When you get to the weekly fair value gap, what do? You wait for the 4 hour to shift structure. If it was a daily fair value gap, you would wait for the 1 hour to shift structure. Now, if you're now looking to execute in Q zone, if it is a 1 hour fair value gap, you draw down to 5 minutes to shift structure. If it was a 4 hour fair value gap, you draw down to 15 minutes in Q zone, right, to shift structure. So that's how the time frame alignment works. So it's not like you just see a 4 hour fair value gap and then boom, drop down to the 1 minute time frame. Most times you get stopped out because the levels are not so clear if you just jump time frames or if you are too close to time frames. So the perfect alignment of those time frames is what time frame alignment is. So again, to just write it all out, it is weekly for 15 minutes. Now, why am I just starting from weekly and daily? That's where you really do most of the analysis from. Then it's daily, 1 hour, 5 minutes. Yeah. So the time frame on the movement from this also goes to from 15 minutes to 1 minute. And this starts from the monthly. So it goes this way. Whatever time frame you spot your internal to external on, your intermediate time frame will now be the time frame you look for your shift in structure. Then your execution time frame will now be the time frame you look for your balancing of the intermediate time frame fair value gaps, or let's even say PDRs in general. So yeah, that's what time frame alignment is. I don't know if that was clear enough. Next question: how do you know the currency pair to trade after analyzing our news? So let me share my screen to back to the Forex Factory. Now, there's something that many people might notice, or which I've not even spoken about yet, is when the dollar is in a consolidation. That's the best time to trade exotics. And exotics basically that pairs that don't have the dollar tied to it. So your question on how do you know which pairs to trade? Now, due to the fact that I can see that, like what I said, I'm expecting to see a move. Like my first part of the outlook to play Monday, Tuesday, early in the week. Due to the fact that I know that there's news on Monday and there's news on Tuesday, that already signifies that there's going to be volatility. And we always want to be around where volatility is. We are not trying to trade the news. We're trying to set ourselves in a position whereby we can bank on the market giving you volatility at that point. You don't want to be stuck in all the consolidation. You want to wait till, like what I said, after consolidation is manipulation, then the distribution. So this is the fact that the market always manipulates around where the news event is. You want to trade as close as you can to the news event and not try to trade the news. You just want to trade as close as. So that already signifies that okay, Monday we might see moves, Tuesday we might see moves, right? Now, usually if it did happen to be NFP week, I'll also say okay, Wednesday is still be a good day, but we're also thinking that okay, NFP is the main event, and the whole idea, everything still being fractal, is we could now start seeing manipulation or consolidation before we now start seeing before NFP now actually gives us the move for the week. So what many people do, right? I don't trade exotics, but what many people do is when they spot that okay, NFP is getting closer, the dollar might be in a consolidation, so they go and trade pairs like NZDJPY or whatever exotic you want to trade, CAT CHF, however it is for you, or whichever chart you look into and you feel like you have your execution, or not execution, your outlook strong on, that's where you're going to trade on. So that's how I'm able to pick pairs through the news. So let's just even go back to a situation whereby it was much more scanty for news events. Now, in a scenario whereby we see this Tuesday, we had all USD news events. Remember what I said, CPI is a big event, so we're not going to do anything on Monday. We wait for post CPI. And I remember this week we had good euro shots on this week because we waited for the market to give us sign on the dollar post CPI. So we had our trades on Thursday, on Wednesday too. So that was how I was able to decide that okay, I would trade the dollar because Monday we didn't have any news on the dollar, probably consolidation, right? We now have CPI. From CPI, we now have the real move. Due to the fact we still have USD events, it now makes a lot of sense to trade USD based pairs. Exactly. So that's how I just look at the weekly calendar and say, okay, I'm going to be focused on USD this week. Now, I also want to take attention to the fact that we have interest rate on euro. Yeah, the main financing rate on the euro on Thursday. So remember what I said. This is literally euros FOMC. So interest rate for the euro, and it falls on a Thursday. Find out what we want to do on Monday and on Tuesday, then sit out the middle of the week and wait till post NFP. So that's also picking what pair you want to trade. So next is going to be if the candles wick breaks the high but doesn't close above the high, is it still considered a break of structure to the upside? No, that is not considered a shift in structure. And let me go to charts. When that happens, in situations where things like that happen, you want to now wait. So now we're looking at a weekly time frame. This is no longer a shift in structure on the weekly because it was looking like one right before this weekly candle closed. Because if you want to know how this is a week, but this signifies that at a point in the week the market was here on a red candle. If you are closed that way, that is a shift in structure. But due to the fact that we have closed back into the range, this is what stops being rated. So this is what stops being rated, and it could literally just flip from here. That's why we want to wait, and that's why now I'm leaning more to seeing USD based, like USD leading currencies, like having more upside because I'm expecting that on the dollar. So would that be shift structure? No. To answer your question, and why is that so? Because you don't know if the market just wants to reverse because we've closed back into the range. So now what can also happen? Let us assume we're not bullish on the dollar and I'm wrong on my bias to start the week, and we now have the week do something like this. Now this will not make a lot of sense. We now have this candle as a bearish candle. Now at this point, this now signifies that okay, this wasn't the stop point. The market now is actually showing us that we want to go lower. Yes, that makes sense. Now you cannot say okay, the market has shifted the structure. So yeah, that's what we need to know. So okay, look at this. Now this is a shift in structure because the market closed above this high. That's why I told you this is a level of certainty. The market could retrace and buy, or looking at it on a higher time frame, this is no longer a shifting structure because we close back into the range. So we are just setting on one thing happening, the market retracing back at some point. After this level of uncertainty, we'll see what will happen. So yeah, it's not a shifting structure if we close back into the range because it could easily just reverse. So you really need to be careful around areas like that. So yeah, those were all the questions, and I'm guessing there's none. I'm going to end the recording finally here, and I'll just wait for 5 minutes if any question needs to be, you know, asked. And yeah, if you want to leave, you could leave now. I'll just be waiting for 5 minutes. So yeah, you guys should trade safe. Remember not to rush. It's NFP week. There's nothing wrong if you don't have any trade for the week. So but yeah, that's fine. So yeah, you guys should trade safe.